Good morning, welcome to Nifty Prediction. My name is Narendran. To join my WhatsApp group, I am charging 500 rupees per month. You will get advanced prediction details as well as calls in the group. If you like my research and if you want to support my research, you can donate me using this Google Pay, PhonePe and Paytm. Let's go to the Nifty, how it has closed on Friday, and we will review our prediction as well. Nifty ended up in the negative 14,341.35. 64.80 points in the negative, 0.45% in the negative. Opened around 14,326.35, which is well below the previous closing, and the low went around 14,273.30. High went around 14,461.15. This high today, it was near to our pending target, but still not close that pending target, because it is not even closer to that 3-point edge, because our pending target is somewhere around 14,464 point something. So that 3 points still not closed. If it is closed, this particular high target would have closed, but it is still not closed. This 14,464 is not closed. At the same time, one more positive target is also open. I will explain you with the prediction sheet in our data. So this is our Friday chart. So I would like to explain you with it, because our data clearly indicated volatile market. The data is clearly shown positive side 50-50, so which means 2 indicating positive but other 2 indicating volatile because of difference of 1 point. So which means we know that the volatile market the market initially opened in the gap down 14,326 and went down a bit, and then market started to recover. So once it has fallen down, the market has started to recover towards the positive side. It has reached somewhere around 14,461, which is, we have the pending target of 14,464. If anyone would have saw my previous video, they would have known this particular target. So it has, after close to that, it started to fall down from almost once again 110 points from that level to the low. Once the low is still not broken, the low is perfectly matched, so it has started to recover once again almost from the low and closed somewhere. So even you can check the volatile level of 1, which is not matching with the high. See, 14,461, which is not matching in between both. So which means it has broken the stop loss of 14,450 plus 10 points, which is 14,460. So broken by 1 point. So next target will be opened. So 14,478.9 it has opened. So one more target, which is 14,478.9 something, it has opened new target 90. So we have still the pending target 14,464. I'll explain you with the group calls. And the market has given up from that level towards, once again towards the low, which it has kept the bearish level. It has kept the low 14,279, which means 14,279 minus 10 points means 14,269. That is the stop loss level. So it is not broken the stop loss. That is the reason the market has recovered a bit. And let's go to our prediction chart. In our group calls, we have given the calls well in advance. Even 22nd itself, we have given this about Friday. So which is clearly we have pointed at 50% on the positive in the volatile market. And we know the target of 14,464.38 as well. So we know that the market is having downside target of negative side, which is 13,599.85. So negative side bearish, but at the same time positive side we have a target of 14,464.38. So we want to keep both side options in hand due to this both target is there. And at the same time, if these levels are not breaking, then we have a good chance to market to fall down from that level, and we need to closely monitor 14,478 and 14,506, because there is no much difference in between these two levels. Why? Because I will show you why. Because of the pivot level is there. You can see that 14,478 and the next level is 14,506, because the pivot level is there at 14,510, which means anything below that level, if the market is not breaking, it will once again fall down from that level. That is what happened after not able to break that 14,461. Then the market is started to fall down. So we have the 14,464 level. So that is what we know. We clearly given that the market is not breaking after this target. Market is not breaking this level, and then 14,005, then the market will having the chances to fall down. So we really asked to buy PE. So we asked to hold PE at least for 1 week time tenure, because downside target is a bit heavy. So we asked to keep one put option in hand, and we have also given that par value is also matching with that particular 14,506, which is 14,508. So anything less than that, market will always try to fall down. That is what exactly happened. The market is fall down as well. We given the put option 14,000 PE and 14,800 CE as well. So the rate of 38 to 78, but still the pre-opening is bit negative, but still I asked to keep stop loss. Whoever want to go for a full week, for example, bought on Friday and holding for a Thursday, full risk means they can hold. Otherwise they need to keep stop loss like that I have given, because these are all the levels of stop loss on the level. And as per the data, we need to keep both options and minimum of 10 rupees if anyone want to go. That is the plan. But what I given after the pre-opening, because the pre-opening is extremely bearish zone it is, but still I know that the positive side target we have 14,464. So which means the market will try to go up towards this target. That is the reason I wanted to keep stop loss somewhere around 78 to 80, because even the gap down open happened, but still the price will not move that much. That is the cost. So we kept a stop loss somewhere around 78 to 80, and we want to buy once again after the market is gone towards the positive side. So it will get little cheaper, and it has, as expected, it was open somewhere almost 9 point only. Normally if the market is opening 90 points in the negative side, means anything 78 will go around 50 points, 40 points. But on Friday it was not opened that much as expected towards the point. It has went only high around 94, then it has got hit the stop loss. So but still we have two kind of trading ideas, which is one is holding for a 1 week tenure, one is exited at 80 with a stop loss, and once the market goes down we need to buy again. That is the plan. And we also holding full risk 14,400. We bought it somewhere around 200 240, which it has opened somewhere around 240 in the opening itself. This is also the same plan. So full risk we need to hold, or we need to exit at the cost to cost level. And we given one more call, which is 14,900 which is asked to buy somewhere around 11 and keep stop loss of 55. It has went almost 20, and we exited with 20 stop loss. So it has slowly moved and reached 20. So we exited somewhere, because we know that this particular target tried to hit, because if it is not hitting, or after hitting it might go, or it will fall down. So that is the idea. We asked to keep stop loss somewhere 21, and exactly that particular 14,900 call option has went 21. So after it went, we kept stop loss at 20, and we exited with 9 points profit. So because that is the best way to play, because this particular level is not broken. We know this particular level 1 day in advance exactly the market is reaching towards that level, and 14,461 is the high. It is not able to break 3 point stop loss, 3 point perfect range. So which means it is a clear indication market is going to fall down. So we need to keep stop loss, otherwise we will lose that money. Even in a small way also we will lose that money. So small traders who bet it somewhere around 11 rupees, they would have enjoyed some 670, because the investment is somewhere around 825 only. And as expected, we waited almost 11:33. There is no any call, such call, because we know that the market will have this kind of thing. And after we exit stop loss 20, it has came down to 7. Still we want to hold that put option, like that. Some people are asked whoever bought it at the high, because we given that 14,464 is target is solid, because 3 point range and 10 point stop loss range also pending, so market will try to recover. So that is the reason, when the market reaching that level, whatever we bought, we asked to exit with a profit for the intraday, so we can buy on next day as well. So we exited. So that is the call which is given, and it is a quite good day, but still the levels are there in the volatile. So the low is matching as per the data in the bearish, high is broken that and opened the new targets. So it is a quite weird day, but still it is fine. It is gone as per our prediction as well. And let's go to the prediction for Monday data. It is evenly poised. Evenly poised means 33.33% chances to bullish, 33.33 chances for bearish, and flat is also 33.33 point chances, which means you can't easily predict the market, but you need to keep both options in hand. If it is goes bullish, you will enjoy the good profit in the call option. If it goes extremely bearish, you will enjoy the put option with a good profit. If it goes flat, then you will caught in between. So it is quite tough day. So I specifically warn my small traders to stay away from the market, or if you want to participate, bet both side minimum of 10 rupees and wait. So if you don't want to take risk, better stay away from the market. And these are all the par value. Anything par value below than that, the market will go negative side. Above that particular par value, it will try to go positive side, but still as per the volatile day, it might go oscillate in between 68 to 400 points. This is one kind of scenario. Another scenario, 173 to 500, or full stretch 7 to 78 to 600. So positive side is 278, negative side is 678, which means almost 400 points extra in the negative side. So just negative has a bit upper end. These are all the support and resistance level. There is a bullish warning signal as well. So if bullish warning is breaking, means market might have the chance to go 14,467 once again, which is we are having the pending target, which is 14,464. So we have a good chance to hit that particular level. If it is not moving that beyond that level, we have the chances to fall down once again towards the negative side. So negative side with heavy negative average, normally the volatile market which tried to reach positive average to negative average. So positive average we have 126 points, negative average is 350. So which means it might have the chance, but still we need to play much more cautiously. It is not easy. It might not come down, it might go in the positive as well. So evenly positive, any result is possible. So we need to play much more cautiously due to the warning signal is came in the bullish. So if it is comes like that, means sometimes it may not come down, it might go up and up without breaking certain level of overall average. So that is the case. And these are all the stop loss levels. Monday stop loss level, anything open above this level, you need to keep stop loss 14,262. For the extreme bullish, anything opens even in a positive, you need to keep stop loss 14,011.93. but the gap is huge, because stop loss normally we will get some 20-30 points, something like that, support level 1. But here today the support level 1 itself having the gap stop loss 229 points, which is huge. So negative side is also a bit heavy. You need to play much more safe way. And the bearish market, anything opens below that level, you need to keep stop loss in this particular level. It is extreme bearish market. Anything opens even minus 1 point, you need to keep stop loss 14,415. And these are the pending target for the positive side. Last month pending target, we are only tracking that. It is not that much having the chances to hit, but still it might outside chances are there. So we are tracking almost 27 days gone. It is 28th day for Monday. So we are still tracking, and the pending target still have, which is the third day. And the new pending downside target is 599 is also there, that is pending for almost 7 days, so it is the 8th day. And the new target which opened 14,478, there is no much difference between these two, only 15 points roughly, so we need to watch out those as well. And book profit for the small investors, due to it is a volatile market, every now and then you get profit 50 to 100% you need to book, and you must have to keep both options minimum at least 10. That is the idea. If you don't want to participate, don't participate at all. For the small traders, it is not going to be that much easy, and evenly poised day came means the result might be weird. We can't easily predict the trend or the closing. Very tough to trade on this particular day. This is the reason I'm telling small traders better stay away from the market, and the warning signal is there for the bullish market as well. So we are having the lower side target bit heavy, so we are keeping small put option always in hand, but at the same time there is a bullish warning signal, which means it might go extremely bearish, it might go extremely bullish, so nobody can able to predict. So that is the reason we asked to keep both options at least minimum 10 points, any strike price. That is the way we need to trade. We need to take as chances how it is going to be. Let's see how the market is going to be. Please, small traders, better try to stay away from the market. Let's see. Thank you.